tell us a little bit about what we're seeing in terms of the inflation picture versus the recession picture, because people are worried about how consumers are feeling and how this could impact the markets.
Right. It's a very cautious balance that we're all worried about. And obviously, when we keep hitting these record inflation numbers, of course, there's fear that will slow the economy so much, and then we'll hit the recession. Now, one of the things when we talk about this is we're often looking at the 2007 financial crisis or other inflationary periods where the employment picture was not as robust as it is right now. As we know, it's about 3.6 unemployment. There's 11 million job openings, which essentially means 2 job openings for every unemployed person. That's still very robust and strong. So when we talk about a fear of slowing down, it's okay if it slows down. Most people are still, people who really want to be employed are employed. And though it is unfortunate that your wages buy a little less, a little slowing down is exactly what we need because consumers are keeping those prices so high.
What do we need to see from bank earnings this week?
So that's, I think, what we're really going to need to see is how they guide forward. Now, we know that the second quarter was phenomenal, and most of them are going to post record profits. The problem is we know that the economy is starting to slow and that loan growth is starting to slow. We've seen that already with higher mortgage rates and less loans. So it's really going to be about how much are they going to forecast on slowing growth and how much is that growth going to be hit for the full year. So probably no matter how great they report, it's going to be about the future.
Erin, how much significance are you assigning to the yield curve inversion?
I think it is important to look at. Certainly, the bond market is very good at predicting what happens in the economy and even where equity goes and equities go. And when you see this, really dramatic inversion where even the 1 year is trading at a higher yield, or briefly was today, versus your 10-year, that's something that you have to take note of, obviously. And so I think that really is saying that we're definitely going to, at the very least, see a slowdown, if not a recession. It could be something very brief, a simple 2-quarter recession. We already had 1 quarter of negative growth, so it could be something very small and very minor. But certainly, the bond markets are telling us that we're expecting a recession, and they're expecting the Fed to really increase rates at least by 75 basis points on this next round.
How do you trade around the U.S. consumer story then if there is this risk that inflation, the mindset is already entrenched?
Yeah, it's been a very, let's say, a very challenging market and already in how to pick stocks, particularly in the consumer area. And so I really look for strong balance sheets and places where consumers will still be spending no matter what the prices are. And so one of those areas is the home. So companies like Lowe's still has been doing very well. Another company, it's a small cap, it's a little riskier, but it's called Front Door Home. It provides all the services you need as a homeowner, so it takes care of all your plumbing, electricity. That's been coming off of Lowe's. So being very tactical, but also making sure you have very strong balance sheets and thematic.